Hello, good morning.
Good morning, sir.
I hope everyone is
Good
fine.
morning, sir.
Yes, sir. We are fine, sir.
Thank God. Okay, so for the past 3 weeks, we've been talking about what public sector is. We've explained what public sector is, and we've also looked at even the differences between the public sector as well as the private sector. We looked at some of the various accounting concepts or some of the accounting that we treat it in the public sector and how we also apply this accounting in the private sector. So last week or last 2 weeks, we said that in the public sector, they use what you call the IPSAS, the IPSAS, that is the International Public Accounting Standard. They use the IPSAS in its preparation, and the private sector will use the IFRS, that is the International Financial Reporting Standards. From there, we looked at some of the discrepancies or the differences between the IPSAS or the public sector accounting and the private sector accounting. And we said that the public sector accounting usually use the cash basis or the accrual. But when it comes to the private sector accounting, they are supposed to use the accrual basis. Also, we also noticed that there are some regulatory frameworks that cover the public sector. That is, there are some rules and regulations that governs how funds should be raised and how funds should be spent or dispersed. We realize that the constitution clearly stated that there are three main funds in Ghana. We have the consolidated fund, we have the contingency fund, as well as funds that the president or the government would deem fit, or the constitution would deem fit, or the parliament would deem fit to establish. So I say we have stabilization funds, we have the heritage fund, and other funds that we usually establish. Now, we also looked at the content of a central government budget. When they are preparing budget, what goes into it, and we looked at the steps. We also looked at the roles and the powers of the Minister of Finance. We looked at the powers and the roles of the Controller General. So last week we treated everything on the central budget, like central government when it comes to budgeting. Today we are coming to look at budget also in the local government. Don't forget that we've also looked at the various types of budget or the approaches in budgets. We looked at the zero-based budget, we looked at the incremental budget, we looked at the program-based as well as the activity-based budgets. We've looked at all. We looked at both the advantages and disadvantages of each of these budgets. Now, let's look at budgeting the local government. When you say local government, it's just talking about the MMDAs, the ministries. The local government just talks about the metropolitan, the municipalities, the district assemblies. That is what the local government is. You realize that for them, they always, most of the time, 80% rely on the funds that will be coming from the government. That is the subventions that will be coming from the central government. So when the central government is preparing its budget, you realize that they will apportion part of the budget, part of the revenue that will come in, they will apportion it to the local government. That this is what the MMDAs should use in their operations. However, the MMDAs, they can also involve themselves in other businesses to generate funds for the MMDAs. This section will explain to us how they are supposed to compute or prepare the budget if these subventions from the government come, or if they are generating money from their internal process. So the budgeting process of the district assemblies, that falls under the MMD, that falls under the local government, is captured under the section 122 to 124 of the Local Government Act 2016. Don't forget that the Local Government Act 2016 is also an act, is also part of the regulatory framework, the regulators, as long as the budgeting is concerned, or as long as the public sector is concerned. When we're looking at some of the regulators or some of the things that regulates the budget or regulates the preparation of the public sector accounting, we made mention of the local government, and that section in the local government, this is what it talks about. Now, these are the functions of the district assembly. The district assembly, you've heard of district assembly. What are their roles? So we look at the district assembly, they exercise political and administrative authority in the district. The central government is so busy that he might not get time to come to your district to come and work or to come and see whether things are going on well or things are not going well. So he has dedicated part of his responsibility to the district assemblies. So the district assembly, the leader of the district assembly, that is the DCE, the district chief executive. The DCE will act like the president in the district. And the role that he will play or the function is that they will exercise political and administrative authorities in the district. So if staffs are not going well in the district, they are to write, you have to send it to the district, the DCE. They promote local economic development. That is another role that the district assembly also play. They ensure that the local economy, the economic development in the district is being managed very well. So they put in place measures. So for instance, they might not do anything that will lead to fall in prices of goods and services, but they can ensure economic activity by creating maybe a community center, trying to furnish a market with light so that night market can go on. So they do all these tasks in order to promote the local economic development. They also provide guidance. They give direction to and supervise other administrative authorities in the district as may be prescribed by law. So they also guide people, give direction, and supervise other administrative authorities. So maybe education service in the districts. The DC plays a key role when it comes to that. So they also give instructions to them so that they should do this school like this. They should supply the school with lights and those stuffs. Also, district assemblies are exercise deliberative, legislative, and executive functions. So all these functions, the district assembly also exercise it in its deliveries. And without limiting subsections 1 and 2, the district assembly, so aside these 1 and 2, these are some of the responsibilities of the district. They are responsible for the overall development of the district. They formulate and execute plans, programs, and strategies for the effective mobilization of resources necessary for the overall development of the district. So you realize that the roles that the government does at the central level, when it comes to the district level, is the district assembly that is responsible for it. Because the government cannot do all, even the constituency, we have over 270 plus constituencies. That one is not even an easy task. And each constituency can have like 10 districts, it can have like 5, some can have 3. So the organogram is so big that the central government cannot look or oversee the operations and administrative tasks that is going on in the various districts. So they have established these district assemblies so that they will also look up to into the lower time, so that the lower levels can also communicate. So for instance, if stuff is not going well in your district or in your town, the assemblyman is supposed to take that issue and send it to the DC, that is the district assembly. If the district assembly officer realize that the issue that you have brought is so huge or they can't solve it, what they do is that they usually go to the next higher authority to seek maybe support, then they will bring it to the town. But that is the role that they play. So they formulate these programs and strategies so that they can effectively mobilize resources. Sometimes also the district assembly can also come up with idea that let's build this community center, and anytime someone comes here to hide, we're going to charge the person some amount, and this amount that we are going to charge, we use it in our daily operations. So that one is also a role of the district assembly. The district assembly is also responsible to promote and support productive activity and social development in the district and remove any obstacle to initiative and development. So ensuring that there is night markets, ensuring that funerals and other stuff are organized without any issue. So wedding ceremony, a lot of stuffs are being done without any issue or without any obstacle. So these are some of the functions. You can choose 4 of them or 5 of them, and you're good to go. When they ask you in the exams, you're good to go. They also sponsor the education of students from the district to fill a particular manpower needs of the district, especially in social sector of education, health, making sure that the sponsorship is fairly and equitably balanced between male and female students. So what they are also trying to say is that you realize that they will tell you that, oh, this district has given this student a scholarship. Sometimes they realize that they try to check out the best students in the district, give the person scholarship, fund their education, and when the person finishes, they try to employ back into the district. That is what happens. Now, they initiate programs for development of basic infrastructure and provide municipal works and services in the district. So all these are some of the functions or the roles of the district assembly. They also ensure ready access to courts in the districts for the promotion of justice. So you realize that most of the districts has courts. So we have district courts, circuit, they all fall within the district. So they also make sure that in as much as we are doing stuff to promote our economy or economic activity, sometimes things might go south. So what happens is that they must also create us or give us a way that in case there is issue or the misunderstanding between people, how they are going to resolve it. That is why they have created these court systems. And we have the lower court system at the district level, so that if you have issue in your district, you send it there. So these are some of the rules or the importance or the functions of the district assembly. According to the subsection 4, the district assembly shall take steps and measures that are necessary and expedient to execute approved development plans for the district. They guide, encourage, and support sub-districts, local structures, public agencies, and local communities to perform their functions in executions of approved development plans. So all these are also part of the district assembly's role. The district assembly also shall coordinate, integrate, and harmonize the execution of programs and projects and the approved development plans for the district and other development programs promoted or carried out by the ministers, the departments, the public corporations, and other statutory bodies and non-governmental organizations in the district. So these are also rules or the functions of the district assembly. And also, a district assembly is in discharge of its duty shall be subjected to the general guidance and direction of the president on matters of national policy. So in as much as they have these rules, anytime they are executing their rules, they have to make sure that they stick to the directions of the path of the president, the direction and patterns of the president. So when we're doing the budget preparation, realize that I told you that every year, at the beginning of every year or at the beginning of the period, the government, through the Minister of Finance, will tell all government institutions, public institutions, that this is our policy or this is how we want to go about with our development or with our administrative for the country this year. So they can tell you that we are interested in efficiency, using smaller resources to achieve a bigger goal. So they will communicate this to all the various MMDAs, the local government, the public sector institutions, everyone. So when these institutions are discharging their duties, they have to make sure that they do it within the scope of what the government said, that efficient responsibility, efficient resource utilization. So if that is the case, anytime they are performing their tasks, they make sure that they do it with considering what the president, the direction the president has given to them. And also they must act in cooperation with the appropriate public corporation, statutory body or non-governmental institutions or organizations. So, in as much as they are also discharging their duties, they must also consider the various statutory body, what the government or what the law prevents you from doing, you can't do. What the law tells you not to do, you can't do. So that is what these non-governmental organizations says, or this is what the Constitution says, or the things that will guide the district assembly in discharging their duties. Also, the public corporations, statutory bodies, and non-governmental organizations shall cooperate with the district assembly in performance of their functions. So, as the district assemblies are to cooperate with these institutions, they are also to ensure that they cope or they cooperate with the institutions as well. And in the event of a conflict between district assembly and an agency of the central government, public corporation, statutory, and this organization or individual for the application, the section 567, the matter shall be referred by either or both parties to the regional coordinating council for resolution. So when the district assembly is discharging this duty and you realize that there are some misunderstanding or discrepancies between them and the statutory body, the non-governmental organizations, and the public organization, the public corporation, if there are any issues with it, then the district assembly is supposed to send the issue, or both parties are to send the issue to the regional coordinating council for resolution. So the district issues move on to the next upper level, which is the regional coordinating council. The instrument that establishes a particular district assembly or any other instrument may confer additional functions to the district assembly. So aside the functions that we have stated above, there are some issues or there are some functions that will not be stipulated in the Constitution. However, the person or the instrument or the act that brought the existence of the district assemblies can attach other responsibilities that the district assembly is supposed to do. Now, let's look at the executive committee of the district assembly. So when you go to the district assembly, who are the executives there? And the local government act says that there shall be established an executive committee of district assembly to be responsible for the performance of the executive functions of the district assembly. So the district assembly, they have their rules, but every institution must get a head or must get a group of people who are managing it. And in this case, we call them the executive committee of the district assembly. And an executive committee will be made up of one, the district chief executive. So the district chief executive, the DCE, the district chief executive will be the chairperson. The district chief executive will be the chairperson. The B part is that the chairperson of the following subcommittees of the executive committee. So the chairperson of the following subcommittees. So in the district assembly, they also create subcommittees in it. So we have the development planning, we have the social services, we have the works, we have the justice and security, we have the finance and administration. All those who chair these committees, 1, 2, 3, 4, 5, that is the development planning, social services, works, justice and security, finance and administration, they will also be part of the committee. So aside the DCE, the chairpersons of these subcommittees will also be part of the executive. Now, after that, we have the chairperson of one ad hoc subcommittee of the executive committee elected by the district assembly. So ad hoc subcommittees are committees that were set up for a particular role. They are not part of this already established committee, but they just came in up to solve an issue. So for instance, during the previous administration, there was a committee on trying to tell us why the exchange rate was going like that. Such committee, we consider them as the ad hoc committee because they are not part of the general or the normal committees that we set up in administering the rules or the administrative works of the country. So all these, the chairperson of that ad hoc committee that they will set up will be part of the executive. Then finally, any two other members elected by the members of the district assembly, at least one of whom is a woman. So these are the composition of the executives of of the district assembly. Then you have the secretary of the district assembly shall be the secretary of the executive committee. So the person who is the secretary at the district assembly, when they go to the committee, he will be the secretary of the executive committee. Now we have the district budget. The budget for the district assembly shall comprise of the following: A, the aggregate revenue expenditure of the office of the district assembly. Then 2, the budget for the annual development plan and programs of the department and the district assembly. So when you take the budget of the district assembly, it's made up of these two: the one that aggregate or adds up all revenue and expenditure of the office of the district assembly, the departments of the district assemblies. That is one budget. Then the other budget is also the budget that they usually prepare in relation to annual development plans and programs of the departments of the district assemblies. We have submissions of the budget estimates. How do they submit these estimates to the district? Through the ranks to the regional as well as to the central, so that the central government can add it up in their central in the general budget preparation. Now, each district assembly is responsible for preparation, administration, and control of the budgetary allocations of the office of the district assembly and the departments of the assembly. Each district assembly shall, before the end of each financial year, submit to the regional coordinating council the detailed budget for the respective district that states that the estimated revenue and expenditure of the district assembly for ensuing year. So what happens is that every year they have to make sure that they have submitted their budget estimates, detailed budget of the respective districts, to forward it to the regional coordinating council. Then the regional coordinating council shall collate and coordinate the budgets from the districts in the region and shall submit same to the minister responsible for finance. So you see how it goes. Each assembly will prepare their own budget. When they are done, each district assembly will forward all their budget to the regional coordinating council. Then the regional coordinating council will gather everything, put everything together, and send it to the Minister of Finance. Minister of Finance. Now, when you talk about the revenue of the district assembly, that is the revenue that comes from the district assembly. It's made up of these. It's made up of these. So when in district assembly, their source of revenue is only 3. They have only 3 main sources of revenue. We have the decentralized transfers. The decentralized transfers is what I call the subventions. So the central government will always send money or add in their budget. They will add money to it, that this is the amount that they are to send to the district assemblies. So every year, the government is expected, or the central government is expected, to transfer monies to the district assemblies. That is one of their main source of income, or their main source of revenue. So we have the decentralized transfers that usually comes from the central government. Then we have internally generated fund. Internally generated fund in this case is just where the district assembly itself decides to establish a business, a private business, a public business, any business that is going to render them or bring in cash to them. So this is the internally generated fund. So that is where the district assembly can decide to buy buses and use it for hiring. The district assembly can decide to build a community center and use it for hiring. They can decide to buy anything that they want, like do this, do that, a whole lot. Sometimes to even fines, and when people when you have issue, when you go to the district court and they fine you, the amount that you pay also all falls under the internally generated fund. Then we have donations and grants. Sometimes when they are there, good people or charitable people will come around to donate some stuffs, and they also get grants from maybe international bodies, local bodies, and other stuff. So these are the three main sources of revenue when it comes to the district assemblies. So they have decentralized transfers, they get money from the internally generated fund, and they also get money from donations and grants. Now, the decentralized transfer comprises of the following. As I said, the district assemblies common fund. When you take the district assembly common fund, is the law says that 5% of the tax revenue, the revenue that you have generated from tax, 5% must go to the district common fund. So that also forms part of the decentralized transfers. Grants in aid from the central government, when the government gives them money in the form of grant, it's also coming from decentralized transfer, and any other revenue transferred from central government to the district assembly. So this is the composition of the decentralized transfer that I was trying to explain to you. The internally generated funds. This fund comprises of the following. It consists of the licenses. So if you go to the district assembly for them to give you license, maybe you are license for your business operation, the amount that you pay falls under the internally generated fund, the fees and the miscellaneous charges. When you go to court, when they charge you fees, or when you do something and they charge you for fees, taxes, taxes like property tax, investment income. So if they themselves can decide to invest something, and the income that they get from the investment is what the investment income talks about. Rates, property rates also falls under this. So these all sources also falls under the internally generated fund. Then the district assembly shall open a district assembly shall open and maintain a bank account for revenue and other money raised on receipt. So the district that the money that the government will be transferring, they are not going to transfer it into the individual accounts of the district chief executive, but they will transfer it into the account of the district assembly. So the constitutions or the local government act also ordered, or it usually orders the district assemblies to open and maintain a bank account so that any transfer that needs to be given to them will be transferred into it. A district assembly may borrow to finance projects in accordance with the relevant laws. So the fact that they are getting money from government only doesn't mean that they can't go for loan. They can also go for loan. They can also go for loan to fund a project. So they can go for a loan to build a school. Then they use the income that they will get from the school for the payment of the loan. And for the purpose of this section, grants means donation being funds paid directly to the district assembly for development or by development partner. Please, any question? So that is the district assembly budgeting. Please, any question? Are you with me?
Yes, please, sir.
All right.
Yes, sir. Yes, sir.
All right.
Sir. Yes, please.
Yes, please. I'm listening.
Yes, please. So as part of their internal generated funds, they can. I don't know whether what they normally take from the market. They do go to the markets to mobilize some funds. Is it part of that? They are internal generated funds.
Yes, it's part of their generation. So that one is the rate, market pools, the market rate that they take. It's all part of the internally generated fund. Any money that they get that do not come from the government. Or
Thank you.
grant is the internally generated fund.
Thank you very much.
Any other? All right, let's look at the financial reporting. So now we are done with the budget. Okay. Luis, your hand is up. Luis Azabiga. Okay. So, Luis, your hand is up. If you have question, can you ask? All right. Now we are done with the budget. We've done the approaches of budget. We've done budget in the central government budget, what it goes through, the process that they go through. We are done with that. We have also done the local government also budget, where the local government we concentrated more on the district assembly. Now, let's look at the financial reporting. That is financial reporting in the central government. Financial reporting in the central government. So we will look at how they report their financial budget. We look at how they record or how they report on their central on their account. So financial reporting in the central government. So this section we are going to look at how the central government reports their accounts. Central government. If I say central government, I'm talking about the Ministry of Finance. Those are the central government. And you realize that for the central government, the kind of revenue that they will receive is different from what the local government will receive. The central government is where they have these three funds. They have the three funds that I made mention of. So that is where that is where all monies in the country goes into. All monies in the country goes into the central government. So how are they going to account for all this money that has come in? That is what you're coming to do under this unit 3. Okay. Now, central government means unit of government that exercise authority over economy of the country. So in Ghana, it's only the Ministry of Finance that will exercise authority over the economy of the country, not the economy of the district, the economy of the country. So the central government funds is mainly controlled and managed by the Minister of Finance. The Bank of Ghana, because that is where the consolidated fund is. Controller and Accountant General, because those are the people who spend the money from the consolidated fund. Internal Audit Service, they audit or they make sure that whatever the Minister of Finance says should be the expenses to be spent, whether they've done the right thing. Then Public Accounts Committee, they also put the Minister of Finance in check to see whatever that they are doing is right. So in Ghana, these are the people who control and manage the government funds, the central government funds. So the Minister of Finance, the Bank of Ghana, the Controller and Accountant General, the Auditor General, the Internal Audit Service, the Public Accounts Committee. These are the people who are responsible to control the funds. Now, these institutions form the major financial control institutions of the central government's financial system. For the purpose of our study, we will concentrate on the Ministry of Finance. Only the Ministry of Finance and the Controller and Accountant General, since they play significant role in the central government's financial reporting by managing and controlling the funds. So the Ministry of Finance will prepare or will ensure the revenue generation. Then the Controller General will also talk about the dispersion of the revenue that has come in the form of them paying salaries of public servants civil servants, as well as, in other words, all government employees. Now, public funds, we've discussed this several and several again. So, public funds is the fund into which all revenues raised and received by or for on behalf of the government are paid into. So, all funds, any money that the government receives, the fund that they put the money inside is what we call the public fund. And these funds that we are talking about, or these monies that we are talking about, includes all revenue. And this revenue can be tax or non-tax revenue. There are some revenue that we get through tax, and there are some revenue that we get which are not as a result of taxation. So we have the tax and the non-tax revenue. Sometimes the government can receive grants, they can receive loans, they receive bonds, debenture, and any other security received by or on account of or payable to or deposited with the government or any ministry by an officer of the government in his capacity as such, or any person on behalf of the government. So any money the government receives on behalf of the government or by the government must be deposited into the public fund. According to the Article 175 of the 1992 Constitution, it gave us three funds. It gave us the consolidated fund, it gave us the contingency fund, and other funds as it may be considered or as it may be established by or under the authority of the Act. Now, the consolidated fund. This fund has its existence from the 1992 Constitution. It is a general fund of government into which all receipts are paid into and out of which all withdrawals, except those that are charged on other funds, are made from in accordance with the Constitution. So when you take the consolidated fund, is the fund that all monies that received must be deposited inside. All payments or withdrawals that needs to be done must be done from that fund, unless that there are particular withdrawals that has been specifically designed to be taken from a particular fund. So maybe COVID-19 came, and the COVID-19, we needed an emergency expenses to be incurred. And the Constitution has stated that anytime there is such unplanned activity, it must be taken from the contingency fund. So such expenses, we couldn't have taken it from the consolidated fund, but rather other fund that is responsible for such activity. And thus, there shall be paid into the consolidated fund. So the funds, the amount that will be paid into the fund, one, all revenues or other monies raised or received for the purpose of or on behalf of the government. So any money that the government has received, any money that has been raised on behalf of the government must be deposited into the consolidated fund. Any other monies raised or received in trust. So if the government receive money in trust on behalf of or if the government receive any money, he raised money in trust, the money must also be deposited into the consolidated fund. Then the revenues or other monies that shall be paid into the consolidated fund do not include. So these are the monies that do not, or we will not deposit it into the consolidated fund. Revenues or other monies that are directed by the Act of Parliament to be paid into other funds established for a specific purpose. So Parliament can sit down and say that any money that comes from this, we must deposit into this fund. Example is the District Assembly Common Fund. When we raise the tax revenue, 5% of the tax revenue must be deposited in there. We also have road fund. And this road fund also, these are monies that will go to the government, and assuming under normal circumstances, are supposed to be deposited into the consolidated fund. But because Acts of Parliament, government has established an act that it should be paid in the road fund. We also have the Heritage Fund, we have the Stabilization Fund. The Heritage Fund, they are saying that any revenue raised from petroleum or any revenue raised from these petroleum people must 15% must be deposited into the heritage fund. So this one also is an act of parliament that is telling us to do that. Also, revenue retained by the government department that received them for the purpose of defraying the expenses of the department. So, for instance, you realize that property rate should have been sent to the government. Property tax is a tax revenue and it should have been sent to the central government. However, the Constitution do not allow them to send to the government, but rather keep it at the district level. So aside such funds, any other fund must be deposited into the district, into the consolidated fund. And withdrawal from the consolidated fund, there is a strict restriction. There is a strict restriction on withdrawal from the consolidated fund. According to the Article 178 of the 1992 Constitution, there are only two conditions for withdrawal from the consolidated fund. So if you want to withdraw from the consolidated fund, there are only two conditions. If you want to withdraw from the consolidated fund, there are only two conditions. Two. The first condition is that the withdrawal is made to meet expenditure that is charged on the fund by the Constitution or by the Act of Parliament. So statutory expenditure. So there are some expenditure that the Constitution has said that every year, every month, this amount or this expenditure must be taken from the Constitution. And such example, one example is people in the high position, their salary. So for instance, the salary of the government, the salary of the president, vice president, MPs, all those people in the high rank, the Constitution has stipulated that their expenditure must be paid from the consolidated fund. Where withdrawal of those monies has been authorized. So in other words, aside those the Constitution is telling them to pay from the fund, any other expenditure or any other money that needs to be withdrawn must be authorized by the specific authorities. So the government can authorize money to be withdrawn from the consolidated fund. The Act of Parliament can also sit down to set a rule or set an act, establish a law that these funds must be withdrawn from the consolidated fund. And that is done when they write, when the Minister of Finance send an authorization bill, and they will pass it to become an authorization act. When they act, it's like they are giving you authority to spend from the consolidated fund. The means of authorizing withdrawal from the consolidated fund by appropriation act, yes. So the appropriation act, when it is passed by the parliament, that is after the Minister of Finance has established read the budget and everything, he sends the bill, the authorization or the appropriation bill to the parliament. Then when they approve it, it becomes the appropriation act. By supplementary estimates approved by the resolution of parliament. So as I told you the last time, when they prepare budgets, there is a possibility that they will not be able to meet all the expenses. They realize that the amount that they ascribe to the various items, maybe when the actual thing started happening, they realize that, oh, they underestimated the expenses. So what they do is that they send a supplementary estimates to the parliament and for them to approve. So when it is being approved, then they can withdraw the money from the consolidated fund by a provisional appropriation or vote of account, which allows for spending prior to approval of budgets. So sometimes you realize that you can only withdraw money from the consolidated fund as a result of appropriation bill and act. But you realize that this appropriation bill and act will only be approved when budget has been sent to parliament and they have approved the budget. When they send budget to parliament, it might take some days, some weeks, even some months before they approve the budget, especially when the previous government introduced the e-levy. You realize that it took a very long time before it was being approved. So that lapses, that lag period before the approval of the budget, the government still needs to spend. So as the budget is still there, it has not been approved, the government still needs to spend. The these people has to be paid. The government the employees, public servants needs to be paid. So in order to pay such, the government will issue what you call, the Minister of Finance will issue what you call provisional appropriation of vote on account. This vote on account will then be signed and approved. And this approval is usually done in prior to the approval of the budget. That is, they are waiting for the budget to be approved before they do that. Then by rules or regulations made by Parliament in respect to trust monies paid into the consolidated fund. So this one is also where the government, the Act of Parliament will also give them the right to also order that an amount that has been put to the trust of the government must be taken from the consolidated fund. No money shall be withdrawn from the public fund or any public fund other than the consolidated fund and contingency fund unless the issue of those monies has been authorized by or under the authority of an act of Parliament. So you can't take any money from the consolidated fund unless it has been authorized by the act of Parliament. Now we have another fund, which is the contingency fund, which is the second fund. This fund is established to account for urgent or unforeseen need for which no other provision exists to meet the need. The unforeseen circumstances may include social disorder, natural disaster, and other similar events. Advances made from the fund should be replaced as soon as possible by presenting a supplementary estimate to Parliament to that effect. The contingency fund is resourced from the monies voted by Parliament for that purpose, and for withdrawal to be made from the fund, the President must make a request through a Public Finance Committee of Parliament. So you realize that the Constitution has clearly stated how the funds must be managed. How the funds must be managed and how withdrawals must be taken from the fund. How the fund must be managed and how the fund must be, how resources or how funds must be withdrawn from the fund. Now let's look at other public funds. So when I was reading the Constitution, the 1992 Constitution, I told you that aside the consolidated fund and the contingency fund, there are other funds that the Constitution will say that is deemed that less established or the Act of Parliament will establish. And such fund is the District Assembly Common Fund. It was being established by the Act of Parliament. We have the Road Fund. We have the Ghana Education Trust Fund. That is a GET fund. We have the Venture Capital Fund. We have the Petroleum Related Fund. We have the Ghana Infrastructure Fund. So all these funds are other funds that has been established. But take note that there is a percentage of the revenue generated that will be deposited into the account. Now let's take each of the other funds one after the other. We have the District Common Fund. That is the DACF. It was established by the District Assembly Common Fund Act 1993 at 455. Under the article, the purpose of this fund is to provide resources to support the developmental activities of the local government. It is a fund created to channel resources from the central government to the local government for development. And it is administered by the DAF, that is the District Assembly Fund Administrator appointed by the government. Now, how did they get money to fund this fund that they are talking about? So they have quarterly transfer of a minimum of 5% of total tax revenue into the fund. So every quarter, 5%. Every quarter, 5% of the fund is usually deposited. 5% of tax revenue is being deposited into the District Common Fund. We have income from investment on the fund. So sometimes the fund itself will be invested into an investment account. So it's a fund. So they put it in an account that will generate interest. So the interest that will come on the amount in the fund will also be added to it. Then donation and grant. Sometimes also random person can decide to donate directly into the District Common fund. Then the expenditure charge on the district assembly fund is disbursement to MMDAs or MPs. So most of the developmental projects these MPs do, it usually comes from the district common fund. So when it is being deposited into the fund, the MPs will go into it, or they will transfer some into the MPs coffers and the MMDA's coffers so that they will use it in their operations. We also disburse some to the Regional Coordinating Council, that is the RCC. They deposit some of the funds also to them. So any expenses or any disbursement that will come from a fund can also go to the RCC. Then administrative expenses can also, that is those who are managing the fund also. If you have to pay them, we pay them using those then or those monies from that fund. Now let's look at the road fund. The road fund is also another fund that we usually set aside, the consolidated fund and the contingency fund. This fund is established by the Road Fund Act 1997 at 536. The objective of this fund is to finance routine, periodic maintenance, and rehabilitation of public funds in the country to assist the MMDAs in the performance of their functions relevant to the public roads under any enactment. So these road funds purposely is to fund finance routine, periodic maintenance, and so this is for public roads only. So if they are to build a road, if they are to maintain the road, they use the public funds or the road funds for it. And the sources is that they have a proportion of government levy on petrol, diesel, and refined fuel. So the fuel that we pay for, the percentage of the tax that they pay on it goes into the road fund. We have bridge, ferry, and road tolls. So initially we had road tolls, and these road tolls that we had, the money that they collected went to the road fund. We have vehicle license and inspection fee. So if you go to the DVLA to go and register for your vehicle or do a license for your vehicle, the amount that you pay, part of it will go to the road fund. The international transit fee, all these are sources that we use to fund the road fund. Now, expenditure, routine and periodic maintenance. So when they go there to check the roads and it's not well, they will take money from this road fund to maintain it. They upgrading and rehabilitation of roads. If they want to upgrade a road, they also use the money from this fund for the rehabilitation. Road safety activities, selected roads. So all these expenses will come from the expenditure they charge on the road. Now let's look at the GET Fund Trust. So this fund was established by the GET Fund, the Ghana Education Trust Fund, 2000 at 581, to provide finance to supplement the provision of education at all levels by the government. So that is the main role of this fund, just for education. And usually, you realize that when they are paying, when you go and buy something, the VAT that you pay when you are doing taxation, I hope you are doing taxation. So the VAT that you pay, there is a 2.5% added to the 15%. And they call it the GET Fund. So that GET Fund, the 2.5% of VAT is transferred directly into is transferred directly from the consolidated fund every month into this GET Fund account, and monies are allocated by Parliament. So sometimes also Parliament will tell you that let's give this percentage of money to the GET Fund, donations and income from the investment. These are the sources, and usually we give scholarship to people or to students out of the GET Fund. That's why you realize that they have the GET Fund scholarship. It's coming from this fund that they have already established. So the educational infrastructure in public educational institutions, scholarship to students, student loans and schemes. So if you pay VAT, it means obviously you must also try and enjoy some of the scholarship, but not everyone will get the chance to enjoy such policy. Now we have faculty development research also, allowances. So these are the expenses that goes out of the Fund. We also have Venture Capital Trust Fund, and it was established by the Venture Capital Trust Fund at 2004 at 680. The objective of the trust fund is to provide financial resources for development and promotion of venture capital financing for small business enterprises. So small businesses, they usually take money from this fund to sponsor some of these small businesses so that they can serve us very well. So there are some services that the government will intentionally give it to small businesses to serve. And when they give it to them, they usually want to sponsor them in delivering something. We have sources of money for the funds, and it's equivalent to 25% of the proceeds of the National Reconstruction Levy with effect from 2003 financial year. So they have the National Reconstruction Levy that they usually charge, and after gathering the money, 25% of such funds will go into the Venture Capital Trust Fund. Fees and other monies earned on the fund investment. So all these are all sources of funds. And when it comes to expenditure, they spend these from it. That is when they give money out to SMEs to support. That is expenditure charge on the VCF. We have petroleum related funds. And under the Petroleum Revenue Management Act 2011 at 815, three funds are created. So they have the Petroleum Holding Fund, established to receive and disburse petroleum revenue. We have Stabilization Fund, established to cushion. So the Petroleum Holding Fund, usually they receive and disburse petroleum revenues due to the state. Then when they come to the Stabilization Fund, it's established to cushion the impact of public expenditure capacity during period of unanticipated petroleum revenue shortfall. So anytime they realize that the petroleum that we have is not every year that we are going to have it in abundance. So sometimes it will fall, like its production will fall, and maybe the government will need money from it for something, for huge expenditure. So you go to the Stabilization Fund to use that money for it. Then we have the Heritage Fund, established to provide an endowment fund to support the development of future generations when the petroleum resources have been depleted. So the Heritage Fund that they have there is being established there so that in case there is no petroleum, those people, that generation that will be there during that time will rely on that fund in place of the petroleum fund that we are having. So the previous government, we realized that this fund was established by the Mahama's previous government, Mills Mahama administration. That is 2011. So they established this fund because that was the period petroleum has started coming. That is where they realized that we have petrol in the country. So they established this. During the COVID, there was a report that the funds in this Stabilization Fund was spent. Funds in the Heritage Funds was spent in managing the COVID. They realized that this funds that was established was used in order to solve something that happened. So the current administration was holding the previous administration that they overspend most of the money, they using the COVID as a basis. So they utilize all the funds in the Heritage Fund and most part of the funds in the Stabilization Fund. Meanwhile, the main purpose of the fund wasn't to work out for this fund. Now let's look at the Ghana Infrastructure Fund. The objective of this fund is to mobilize and provide financial resources to manage, coordinate, and invest in diversified portfolio infrastructure projects in Ghana for national development. So if they want to build any infrastructure, they must rely on the infrastructure, the Ghana Infrastructure Fund. Any question, please?
Is it?
Okay.
Yeah, hello.
Yes, please.
So you spoke about the previous government using most of the funds to take care of COVID.
Yes.
Was it that it's like the contingency fund wasn't able to meet that exigency. That's why they again extended their hands into those dedicated funds.
I don't want to sound politics here, but the
Okay.
previous government usually spent most of the money. They spent it inefficiently. And I think it wasn't their fault. They were scared of how the COVID was killing people outside. So they just wanted to do anything to prevent Ghanaians from dying.
Okay.
So they were spending so much for something that they would have used more money to do it.
Okay.
So that was why the contingency fund wasn't enough. And the contingency fund is not for only that contingency. Because in as much as contingencies, something has come, an unplanned activity has come, it doesn't mean that we should use all the money into the contingency fund to fund it. If not, maybe after solving COVID, another pandemic also raises itself. It doesn't mean that we are not going to get money for it. So the other government, the previous government was just not being inefficient. It was just spending money with a small output coming up.
Okay, thank you.
You're welcome. Any other question? All right. If there is no other question, let's move on to the IPSAS 9 and IPSAS 23. Yes, please.
Sir, you made mention of the GET fund, and
Okay.
I am asking, same bank who is we are using the same GET fund to finance the level 100 students, the new students who will be admitted in second university. Are they using the same funds or with different funds they are using it?
Okay. I stand to be corrected. I don't actually know that policy. I don't know whether it's a form of scholarship that they are giving to them, or I don't know. But if a scholarship, that fund, they will take money from that fund. And I think it will not be coming from that fund because during the budget reading, there was a line item for that.
Okay.
During the budget reading, there was a line item for that policy. So it's usually stuff that are not on the line item, and expenditure that is not on the line item, like, for instance, one district, one factory, one district. That one, they needed a line item to fund that policy. The Agenda 111. Is it Agenda 133 or 111?
Agenda 111.
Agenda 111. So that one also, they needed a line item in the national budget. They are apportioning an amount to that agenda. When they are constructing a bridge, the road that they are constructing, for instance, the big push that they are talking about, it doesn't mean that they are going to take it from the road fund.
Okay.
They have a line item in the budget. So that amount that they said they are going, that is what they are going to use for the big push.
Okay, sir. Thank you.
You're welcome. Right, so let's look at IPSAS 9 and IPSAS 23. So IPSAS, I've already told you that with the public sector, they use the IPSAS, that is International Public Sector Accounting Standard. Steven, kindly mute yourself. So IPSAS 18, that is revenue from exchange transaction, objective and scope. So, the IPSAS 9. I've already told you that we use the IPSAS when it comes to the public sector accounting. And one of the key standard that they use is the IPSAS 9. The objective of this standard is to prescribe the accounting treatment for revenue arising from exchange transaction. So they realize that anytime they are preparing the annual statement, revenue will obviously come in. So revenue, this standard will tell us how we have to treat revenue that is arising from exchange of transaction. That is, maybe the local government is the local government has something that they sell to generate money. So anytime there is actually, it can be services that they are rendering. And when they render the services, the money that comes in, how are they supposed to account it for or treat it in the statement? That is what this standard talks about. That is the IPSAS 8, the IPSAS 9. The main issue in accounting for revenue is determining when to recognize revenue. And revenue is recognized when it is probable, that is 50% sure, that future economic benefits or services potential will flow to the entity, and these benefits can be measured reliably. That is the basis where revenue can be recorded. IPSAS 9 identifies the circumstances in which these criteria will be met. Therefore, revenue will be recognized. Therefore, revenue will be recognized. So when you take the scope also, the scope covers rendering of services. So when a local government is rendering services, like they have built a public toilet, and this public toilet that they built, when you go there to use it, you are supposed to pay something. Then this rendering of services, and it falls under the IPSAS 8, is the IPSAS 9. The sale of goods, that is when the local government is selling goods to get money, it also falls under the IPSAS 9. Then the use of others, the use by others of entity assets yielding interest, royalties, and dividends. So if you go and hire something, and this thing that you have hired, you use it to generate interest or royalties, then it's also under the scope of the IPSAS. Now, 9. This standard applies to all public sector entities other than government business enterprise. So, aside government business enterprises, which uses the normal IFRS, aside the government business enterprise, if you recall, the GBEs, the government business entity, aside them, the standard applies to all public sector entities. This standard does not deal with revenue arising from non-exchange transaction. Please, if the and the not to you outside the scope of IPSAS 9, because it's just a gift that you are receiving, it doesn't necessarily mean that you are going to transfer, you are going to push something back to them. Doesn't mean you're going to push something back to them. We have public sector entities. Public sector entities may derive revenue from exchange or non-exchange. An exchange transaction is one in which the entity receives assets or services as liability. So this is exchange and this is not exchange. We also consider what you call substance over form. So yes, find time and read all these standards. The standard does not deal with the following: revenue arising from the following. So revenue that these falls outside the scope of the standard, the IPSAS 9, because other standards take care of this. Other standards takes care of this. The lease agreement, the dividend or similar distribution, all these falls outside the scope of the standard. Exchange transaction, you must know that these are transactions in which one entity receives assets or services or has liabilities distinguished and directly gives approximately equal value. We have fair value, non-exchange transaction. All these you have to know under the standard. Now, measurement of revenue. Measurement of revenue. You have to know that according to the IPSAS 9, if you want to measure revenue, if you want to attribute value to a revenue, the revenue should be measured at fair value of the consideration received or receivable. The revenue must be received or must be measured at fair value of the consideration received or receivable. The amount of revenue arising on the transaction is usually determined by agreement between the entity and the purchaser. So fair value consideration amount, that is the amount that normal people, reasonable people will exchange in a hands length transaction. That is no one is being forced to purchase anything. And look at identification of transaction. All these is like the IFRS 15, which talks about revenue or revenue from customers with I think revenue from contract with customers. That is IFRS 15. Sale of goods also, you can just read it and it's very self-explanatory. When you are done, you just look at what they are supposed to also disclose in the notes to account. What they are supposed to disclose, they have to disclose the accounting policy they adopted in recognizing the revenue. That is, they use fair value. The amount is significant category of revenue recognized. So you have to break down when you write revenue, when it goes to the notes to account, you have to break it down under the rendering of services, the revenue that you generated, sale of goods, the amount that you generated, interest, the amount that you generated, royalties, dividend, or all those stuff. So that is what we call the workings. That is what we call the workings. You can also read on the recognition of revenue when you are rendering services, housing, school transport. On what basis are you going to say this is how much? So when you are doing housing, when you build housing, you are giving out. Your revenue is usually the rental income from the provision of housing. The rental income that you receive. Then school transport also, the revenue from fares charged to passengers. The revenue that you get when you charge customers is what you call the rendering of services. Then we have management of toll roads. Revenue from the management of toll roads is recognized as it is earned based on the usage of the roads, processing of court cases. All these, they just tell you how it's been recognized. All these is how revenue should be recognized, as well as the sale of goods shipped subjected to conditions and other stuff. All these, when you read it, is very self-explanatory. Then when it comes to IPSAS 23, the first one that we did, the IPSAS 9 is where you do the revenue that you have received from exchange of goods. Exchange of goods. Revenue that you have generated from the exchange of goods. Revenue that you have generated from the exchange of goods. Now let's look at the IPSAS 23. The IPSAS 23. Which is on revenue from non-exchange transactions. So sometimes also they can get revenue without necessarily buying or selling or rendering services to someone. And such revenue can be taxes and transfers. Can be taxes and transfers. It can be taxes and transfers. It can be taxes and transfers. And here the standard that covers it in the IPSAS. The standard that covers is the IPSAS 23. The objective of this standard is to prescribe requirements for the financial reporting of revenue arising from non-exchange transaction other than non-exchange transaction that gives rise to an entity combination. So other than those transactions that gives rise to that. And here also we have the scope, we have the definition, condition of transfers to the entity which prepares and presents financial statement on an accrual basis shall apply this standard in accounting for revenue from non-exchange transaction. This standard does not apply to an entity combination That is non-exchange transaction. So definition, we have conditions on transfer of assets. We have control of an asset. We have expenses paid through the tax system. Then we have fines, non-exchange. All these falls under the non-exchange transaction. Stipulations, conditions of transfer of assets, restrictions. So these are all standards. These are all standards that you read and you appreciate. That is the IPSAS 24 and IPSAS 24 and IPSAS 9. The 9 one is where you exchange something. The 24 is where you don't exchange for something. So these are the things that you need to do. You need to know. Now, let's look at revenue and expenditure recognition in the public sector. Revenue and expenditure recognition in the public sector. So when you talk about government revenue, when you are preparing, you realize that this thing that we are doing for the central government. So when you say revenue, government revenue, we are referring to revenue that comes from the government, the central government, that goes to the central government. And government revenue can be examined from different levels. That is the revenue that comes from the central government, which is a consolidated revenue that MMDAs needs to meet commitments, subvented entities, MMDAs, state-owned enterprises. All these monies that we have are usually sources of central government revenue. All these are usually sources of central government revenue. For the purpose of our studies, we concentrate on the central government sources of revenue paid into the consolidated fund. So that is what we're going to concentrate on. We are not going to concentrate on any other revenue, but rather those revenues that will come or that the central government is supposed to. Oh, network is really bad. Please, is anyone having issues with the network aside Ebenezer?
No, please. It's very loud and clear.
It's bad, yeah.
Could Beam say highway?
Raymond, is yours bad?
It's really bad. No.
Mine is open.
So it's very clear.
Can't hear
It's very
you
clear.
when you're talking.
Ghana highway.
Sir, it's very, very clear.
So it's very clear.
Okay. Please, is it okay now? Those who said they can, I've changed my position.
Yes, it's okay.
Okay. All right. So for purpose of our studies, we are going to concentrate on the government, the central government revenue. We are going to concentrate on the central government revenue. That's what we are going to concentrate on for the purpose of this study. And that is the funds that usually goes into the consolidated fund. And when you take the revenues that go to the government, the first revenue that goes to the government is the tax revenue. And when you say tax revenue, it's all money that comes as a result of taxation. So any taxes that they pay, all taxes that they pay usually comes from the tax revenue. Now, under the tax revenue, we have the revenue that they generate from the direct taxes. And in your taxation class, the first week they explain or they differentiated between direct tax and indirect tax. So the direct tax, all revenues that the government will generate from payee, personal income tax, corporate taxes, rent taxes, vehicle income tax, capital gain tax, stamp tax, and dividend taxes. All the taxes that they generate will be in the income side or revenue part of the tax revenue. So under the tax revenue, they have the direct taxes and they have indirect taxes, which include the excise duties, value-added tax, communication service tax, custom duties, petroleum taxes on petroleum products and operations. So all these are all taxes that they have. So the government revenue, they have the tax revenue, which has direct tax and indirect tax. From there, we have non-tax revenue. They have non-tax revenue. And the non-tax revenue includes the receipts of sale of public assets. So in case the organization or the government sells assets, in case the organization or in case the government sells any of its assets, then it falls under the non-tax revenue. Sometimes also in case issues like fees and charges, it also falls under the non-tax revenue. Fees and charges, like when you go to Supreme Court and they charge you, the bill conditions that they give to them, or when they find you, those amounts also goes to the tax revenue. So it goes to the non-tax revenue. Interest, dividend, royalties that we get, the government gets from its direct investment also goes under the non-tax revenue. We have royalties on natural resources, non-tax revenue, rent income, sale of goods of such goods, and sale of goods such as gold, cocoa, and others. All of them falls under the non-tax revenue. So take note, the government revenue, the main heading is that we have tax revenue, and under the tax revenue, we have the direct tax and the indirect tax. We have the direct tax and the indirect tax. Now, the other component is a non-tax revenue. For that one, we don't have any components. The next one is government grants. So when it comes to the accounting preparation or the financial reporting of the central government, under the revenue side, we want to see three items there. Three. We want to see tax revenue, we want to see non-tax revenue, and we want to see grants. And when you say grant, they are the amount the government will receive from international bodies. So these grants, these are financial assistance received freely by the government from either bilateral or multilateral sources without any requirement of repayment to support its operations. So grants are staffs when they receive, they are not going to pay anything in relation to it. So for instance, if the government of China decides to give us money, it's non-lateral, it's a grant without expecting us to pay back. That is grant. So when you are preparing the income statement, when you are preparing the income statement, when you get to the revenue side, you will have tax revenue, you have non-tax revenue, then you have grant. These are the three things that falls under the revenue as long as the tax or the central government is concerned. Let's look at the government expenditure. The government expenditure. Government expenditure comprises all expenses incurred by the central government. Government expenditure comprises all expenses incurred by the central government. Government expenditure comprises all expenses incurred by the central government, local government, and other public sector entities for the delivery of public services. Now, the government expenditure can be classified into statutory and discretional expenditure. So there are expenses that are statutory in nature, that is, they have to incur it. There are some expenses that are statutory in nature, they have to incur it. Statutory. That is, the Constitution tells them to spend it. Then they have the discretionary, that is, that it doesn't really fall part or they are not mandated to incur it, but they have to incur it because of the circumstances that they are in. Ben, your hand is up. Ben. Now let's look at the statutory expenditure. The statutory expenditure, these are expenditure charged on consolidated fund by the Constitution or by an act of Parliament. They are regarded as statutory obligation there and therefore do not require prior approval from Parliament. Example of statutory expenditure are debt servicing, pension payment, emolument of certain public officers like Auditor General, transfers to statutory funds such as the District Common Fund, Social Security contributions. So all these are statutory expenditure. And with this, we don't really seek for any approval. We don't seek for any approval. We don't seek for any approval before it's being ordered for us to pay. Now, these discretionary expenditure, these are expenditure that requires parliamentary approval before authorization is given. They are also known as a non-statutory expenditure. The government has control over the decision to incur such expenditure. So this expenditure, the government has control to incur it. So you can decide to approve it or not. You can decide to approve it or not. So when he approves it, you have to pay. If he does, it means they are not to pay. Now, the government of Ghana expenditure classification has been revolving over time. So how we classify the expenditure, as I was talking about the revenue, I said you can have tax revenue, and under the tax revenue, you can break it down into direct tax, indirect tax. Then we have non-tax revenue, we have grants. These are the items that we want to see when it comes to the preparation of the accounts. These are the items, the line items you want to see when it comes to preparation of the accounts. Now, when it comes to the expenditure side, and it has been evolved over years. I'll tell you the current one that we are using. So over the years, we used to use what we call the chart of accounts. The chart of accounts, according to the chart of accounts, that is a created list of accounts used by organization to define each class of item for which money or equivalent is spent or received. Expenditure can be classified as follows. So when you are to use the chart of accounts, that is how the expenses should be classified. We had before 2012, that is from 1999 to 2011. From 1999 to 2011, we're using the medium-term expenditure framework. And for them, this was the composition of the expenditure. They have the personal emolument. We talked about the salaries that they pay to government employees. So when you go to the expenditure before 2012, that is from 1999 to 2011, they had the personal emolument, where the emolument was on the expenditure or the salaries that they pay to employees. That was the salary that they pay to employees. So you have the personal emolument. Then they have administrative costs, which was cost of running the government establishment. Then they have the service cost and investment cost. So these were initially the composition, or when you go to expenditure, you are expected to see personal emolument, administrative costs, service costs, and investment costs. However, that basis has been taken out. They are no more using that basis again. So from 2012 to date, we are using what we call GEFMES. They are using what they call GEFMES. They are using what we call GEFMES. That's the Ghana Integrated Financial Management Information System. And this is now the composition of the expenditure. We have the compensation of employees. And this compensation of employees will record all salaries the government pays to government workers. So when they are preparing the accounts, They have compensation for employees. That is, it covers all expenditures in relation to all salaries or expenditures in relation to salaries paid to government employees. We have goods and services. And there is a combination of the administrative costs and the service costs outlined at the MTEF. That is all expenses like the training cost, all the expenses that they incur, and stationaries, all the expenses that they incur on those staffs. That is what the goods and services also covers. Then we have consumption of fixed assets. This consumption of fixed assets also costs about the depreciation. So it measures the portion of the non-financial assets, that is the PPE, consumed within the accounting period. Example is depreciation of the non-current assets. We have public interest, that is in case they went for a loan, the interest that they pay on it, that is where the interest that they pay on it is part or fall under this public interest. We have subsidies. Sometimes they also receive subsidies from both, or they pay subsidies. Yeah, they pay subsidies from both private sector and public sector. So if they pay subsidies or they give subsidies, the central government gives subsidies, then it has to put under the subsidies. We have grants. This also refers to where the government also gives assistance to other countries or local governments. Then we have social benefits. These are expenses on social security, such as national health insurance and school feeding. Then we have other expenditure. This includes contingent expenses and other expenses which do not fall under any of the 7 groups above. So we have currently, so if they tell you to prepare the income statement of the central government under the revenue side, you want to see tax revenue, non-tax revenue, and grants. Under the expenditure, you want to see line items like compensation, goods and services, consumption of fixed assets or fixed capital. You want to see public interest, you want to see subsidies, you want to see grants, you want to see social benefits, and you want to see other expenditures. These are the things that we want to see in the statement of income. Please take note, because when in your exams, if you go and bring any other expenditure basis without using this, they will mark you wrong. They won't even go and check anything. They won't even go and check anything. All right. Now, the consolidated fund and the final accounts of central government. When we are preparing the accounts, we have financial. When we are preparing the statement of financial position or those types, we have the financial assets. And under the financial assets, we have cash and bank balances, we have advances, we have loans, we have receivables, we have equity investment, we have investment in other securities. Non-financial assets refers to the PPEs that you know from IFRS. We have the infrastructure, natural assets, and the military assets. Then we have liabilities of the consolidated fund. We have the sundry creditors, payables, trust monies or deposits, and we have borrowing funds. Now let's look at the final accounts of the central government. The final account, that is accounts that you're supposed to prepare. The purpose of the financial statement. Financial statements are structured representation of the financial position and financial performance of an entity. And the objective of the general purpose financial statements are to provide information about the financial position, financial performance, and cash flow of the entity that is useful to a wide range of users in making and evaluating decisions about the allocation of resources. That is the main purpose of the financial statement. We use it for reporting on the financial position, financial performance, and also the cash flows of the statement. So specifically, objective of the financial statement or financial reporting should be fulfill the legal and other requirements, provide information for decision making, provide information for planning and controlling, demonstrate accountability and stewardship of government for use of public assets, measure financial performance of entities or institutions. So this is usually the purpose of the financial statement, specific ones. Now, when it comes to the financial report, it's usually prepared by the Controller Accountant General. They prepare the financial reports on the consolidated fund monthly and annually. And the annual financial reports are prepared in accordance with the general accepted accounting principles and the financial laws. The monthly report is required to be transmitted to Ministry of Finance and not later than 15 days after the end of the month. We have the annual report shall be submitted by the GAG, that is the Controller Accountant General, within 3 months for auditing. Auditor General is required to, within 6 months, to submit his audit report on the Parliament or to Parliament. These are the annual financial statements of the public accounts. So you must be able to prepare the revenue expenditure statement, receipt and payment statement, statement of financial position, cash flow statement, statement of public debt, statement of public investment, statement of advances and loans, and notes forming part of the accounts. So these are the actual reports when it comes to the public sector. You realize that for the private sector, they have only 5. They have the statement of profit or loss and other comprehensive income. They have statement of financial position. They have statement of changes in equity. They have statement of cash flow, and they have the notes to account. But when it comes to the public sector, they have these 8: revenue and expenditure. They have revenue and expenditure. They have receipt and payments, which is like budget estimates. They have statement of financial position, cash flow statement, statement of public debt, and statement of public investments. For the purpose of this course, you will learn how to prepare the revenue and expenditure statements. How to prepare the revenue and expenditure statements. How to prepare the statement of financial position. Then maybe receipt and payment statements. These are the various things that you have to prepare or to learn how to prepare. Now, statement of receipt and payment. The statement of receipt and payment is prepared to show money is actually received into and paid out of the consolidated fund. So receipt and payment doesn't use what you call the accrual basis. Any money that you receive in a consolidated fund, you record it under revenue, and any money that you pay out from the consolidated fund, you pay it as payment. It excludes transactions that are non-cash, yes, in nature. So it's only cash that comes in, and the cash doesn't come in, you can't record it there. So it's just that. There is a typical example of how the receipt and payment looks like. So we have the direct taxes, indirect taxes, non-tax, grant, domestic borrowing, external borrowing, recoveries. So you realize that down here is because it's there because it's receipt and payment. If it was revenue and expenditure, these two will not be there. These three, sorry, will not be there. Because these are not cash nature. They are not revenue in nature. So this one usually uses what you call the cash basis in reporting is in recording. Now let's look at the statement of revenue and expenditure. Statement of revenue and expenditure. The statement of the revenue and expenditure is prepared to determine surplus and deficit. As I told you, this is how it goes. So under the revenue, look at what we see under the revenue. We have the direct tax there. We have the indirect tax, we have the non-tax, and we have the grants. These are the only things that you see there. These are the only things that you see there. Under the revenue. When it comes to the expenditure also, you will see compensation, which will cover all expenditure on salaries. Goods and services or expenditure on rendering services. You see consumption of fixed asset depreciation, public debt interest or interest on loans that they have gone for, subsidies, grants, social benefits, and other expenditure. So when you are that, you sum up all expenditure, you sum up all revenue to get total revenue, sum up all expenditure to get the total expenditure. The difference between the total revenue and the total expenditure, you get what you call surplus or deficit. If the total revenue is more than the expenditure, you get surplus. If the total revenue is less than the total expenditure, you get what you call deficit. And the statement of financial position is a normal one that you know, but here we only have assets and liabilities and funds. So under the assets, you will get non-financial assets, that is a PPE, and the non-financial assets, it talks about infrastructure. Then we have the equity investment, loans and advances, gold holdings and other reserves, bank and cash. So you get the total assets. Then the liabilities and funds. You have the normal payables, deposits, domestic debt, external debt. You get the total liabilities. Then you get the trust funds as well as the accumulated funds. So you sum everything, the total of liability and funds, these two, and the total assets must be equal before you can say that you have balanced the account. Before you can balance the account. So we are supposed to prepare the statement for this. So we can prepare receipt and payment and statement of cash and bank. Receipt and payment, here you just open your receipt and payment. So let me reshare the screen. Okay, let's take it like this. Can you see my screen? So you have your under your receipt and you have your payment.
Yes, please.
You have your receipt and payment like this. You have your receipt and payment like this. So under the receipt, direct tax will go to receipt. Compensation of employees will go to payment. Goods and services will go to payment. Goods and services will go to payment. Non-financial assets. Non-financial assets will not come here because no receipt. Indirect tax will come under receipt. Grants. Sometimes you have to be specific whether it's an something that came in or went out. So grant will also fall here. Interest expense will be under the payment. Other expenses. Other expenses will be under payments. Revenue, other revenue will be under receipt.
Sir,
Yes,
social
please.
benefit.
Okay, social benefits will come under payment because the central government will give us social benefit. There is no way to central government to receive social benefit. It's usually they pay out the benefit. National health insurance levy will come under payment. Depreciation and amortization will come under payment. Loan repayments will come under payment. Levies will come under payment. Loan receipt will come under receipt. Loan recoverables will come under payment, other payments will come under payment, then cash. This we will use this one in the cash and this thing. So you know the difference. You get a total receipt, you get your total payment, then the differences between it. The difference between it will give you the surplus or the deficit. Now, when it comes to the cash and bank balance, that one is going to involve only items on cash. We will resolve this question like next week. Next week, I want us to meet again. I don't know whether we can meet next week the same time, like Sunday 9. Since next week we are not meet, like I think it's revision week. Is it possible? So that we will solve a full question on. Please, is it possible? So that we solve a full question on, because this section, what is left is how. Yes. So
yes, please. Yes, please. Yes, please.
So we will solve this.
Yes, please. Yes, please.
On the full sheet, like an empty sheet. We will start from the scratch, solve this question, example 3.4, and also prepare we will also talk about the ministries of the accounts for the ministries, departments, and the agencies, the MMDAs. We will also talk about them and also learn how to prepare their statements, the contents and the format of their report, and which is similar to the distance. Then we will solve questions. They have to add questions. So we realize that under the section 6, they said we should solve more questions. So next week I'll come with more questions so that we learn how to prepare the annual statement, the financial statement. Susanna, your hand is up. Susan or Susanna.
Sir, please, we have position class. 11:30
Sunday.
1:30. Yes, please.
Are you saying now or next week?
Today.
Yes, I'm done. So I'm not going to solve. I say we are going to meet next week.
Okay.
So next week we will use the same time from 9:30 to 11:30 to solve some of the questions under the preparation of the account. So you do that one, then we look at the local government also. Then we also try to please. Do we have a group?
No, please.
No, please.
A general group, please.
No, please.
Please, the course rep. Please, the course reps, the course reps for each center. Kindly send me a message on WhatsApp. When you send me your contacts, you send me a message. Kindly add your group, like the center that you are, because I will use that one to create the group so that I will share the pages. I will share the listing with you.
Okay,
the presentation topics and also the various groups and what you are supposed to present on. I know someone has sent me their group members, but I might tell them to refine it, maybe to become 2 groups or something like that. So I want them to get me. Course rep, please can you send me a message on the number on the timetable? You send me WhatsApp message, you tell me your name and the center that you are from. Then if it's possible, kindly send me your group list.
Okay, sir.
All right. So thank you very much. Since you have taxation, let me leave you so that I go for the taxation class.
All right, you're welcome.
Thank you, sir.
Kindly have a nice weekend and have a nice day. Thank you also. Bye-bye.
Same here, sir. Bye.
Bye.